Good day everyone, how are you all doing? This is Yixit at Mag Crypto, back again with another video. So in today's video we're going to be looking at the charts, what is going on. There's been a lot of action unfortunately on the red, but also I want to talk about strategy to make sure that we get the most out of this bull run. So without further ado, let's get straight into it. So before we get started, if you haven't already done so, subscribe to the channel and like this video. I would very much appreciate that. Smash that like button. And also, if you want to get started in the market, if you want to learn the fundamental skills, FATA, I've got a course completely free. Link for that is in the description. And also, if you want to join my private Telegram group where I give more regular chart analysis, link for that is also in the description. With that out of the way, let's get straight into it. So first off, let's look at Bitcoin's price action. Actually, first let's start with just looking at the chart overall. It's been a very red day all over the board. We've got a lot of move to the downside, a lot of correction, and it's recovered since then, but I think it was up to 10%. A lot of cryptocurrencies, we actually sort them. There's actually surprisingly few that are, in the green, like VeChain, Hedera Hashgraph, Ren, Icon. But when you start to get to these levels, they're very, very, very minuscule. So, but a couple of coins in the green, which is quite impressive. For the most part, though, we have a lot of red. As I said, some of them have recovered some of their losses. So it was worse, definitely near in the morning. But most of them are in the red from about 5 to 10%. But again, these corrections are completely natural, nothing to get too worried about. We're definitely not in a bear market, just the correction phase of the bull market. And we're gonna get more of these as time goes forward before the year ends. And in a moment when we get to the article, I want to make sure to talk about how to manage these corrections. So Bitcoin, which was in a symmetrical triangle, has now broken to the downside on the daily time frame. You can see here that it's respected this trend line through to the third test. Third time was a lucky number or unlucky number in this situation, and has moved to the downside, going as low as 33,000. If we move to the 4 hourly, we can see a little bit more detail. This move does suggest that we may retest the top of this trend line, but it is looking definitely bearish in the short term. It's looking like we're going to see lower levels, potentially around 30,000, to retest this support, this demand area. You can see there was a massive wick in this level and also a couple of wicks here. So I think it is looking like, especially the fact that we're probably going to hold this level, that we're going to see a retest of this demand, this buy zone. But of course, we've got to let the price play out. We cannot just predict and be certain that's going to happen, but it's looking like that. Moving over to Ethereum. Ethereum actually broke to the upside yesterday. I mean, you probably would have seen a lot of people were jumping straight on the bandwagon saying we are going to the moon. I mean, I'm not gonna lie to you, I was halfway there as well, but even in my private Telegram group, I mentioned we need to wait for confirmation, proper confirmation, before we actually celebrate and get on that roller coaster to the moon. What had happened was we closed above this very important level, but then we did not manage to actually stay above and came crashing down, and we've retested this important trend line and the intersection of this symmetrical triangle, or this wedge, whatever you want to call it, and now it's still holding as support. But it doesn't seem to have found a lot of liquidity here. As you can see, it was only a minor bounce from this level. But again, we can't predict even though it hasn't reacted very strongly, it may still carry on for the next day to continue on going higher. So what I mentioned in my private Telegram group when it comes to Ethereum is, if we can close above this high with strong volume, then I am definitely long Ethereum in the short term. If we're not able to hold this trend line, this support region, the apex of this triangle, then I think we're probably going to see prices of around $900 to $1,000. And I think there's a lot of liquidity in this area over here. As you can see, a lot of wicks ventured into this area. So that's what I would imagine to happen if this trend line, if this area does not hold for support. Moving over to XRP, another situation, in the red. And now we've also got, overhead resistance if it manages to actually go on the offense. But I would say Ethereum, XRP, looks quite bearish. If we actually draw this trend line, so from here you can see the trend line. It's forming. It's tested this trend line quite a few times now. Has not managed to break above this counter trend line, and if you zoom out a little bit, it's starting to look like potentially a rising wedge, which is a bearish chart pattern. So you can see here the bottom of the trend line and the top of the trend line, and it's starting to look like, as I said, a bearish rising wedge, and this would signify that we might see a break to the downside. But we can look at the main support area around here at 18-19 cents, potentially 23 cents. Actually, if we move to the daily time frame, but it's looking like it's really going to go further down, potentially towards this trend line over here. Could potentially move this trend line here. This actually does work, but I think more so over here. So potentially, if XRP breaks to the downside, then we will see a move into this area, which makes a lot of sense because this was a very important consolidation area. Of course, we can go lower than this, down to about 18 to 19, 20 cents. But yeah, as I said, especially on the 4 hourly, it's really looking like it's turned from a potential head and shoulders to now a rising wedge. So we could probably see a move to the downside, potentially to around 18 to 20 cents. Of course, we've got the support area around 18, 19 cents. Moving over to Polkadot. So DOT has also moved to the downside like the rest of the market. No surprise there. I did mention this trend line was looking quite important, and we could potentially see a test of this trend line before we continue on. And as I mentioned, this is looking like another ascending inverted scallop. If that is the case, then we should not be going any lower than the 50% level, which is about $12.90. So maybe we could see a slow breakdown into that area. We've already gone down to about $14, retesting the resistance level formed very recently in the last few days. But of course, long term, very bullish with Polkadot. And these things are very important. These are very good moves because this correction allows all these cryptocurrencies to gain more liquidity, more buyers in the market. How many people have been waiting to get more Polkadot? There's a lot of people spectating, waiting on the sidelines, trying to get a hold of these cryptocurrencies. And as I said, remain calm. These things are natural. They happen in the market. Corrections are perfectly natural. I'll have a look at Ocean before moving on to the article. So Ocean, which although looks like a symmetrical triangle, I think it most likely is more of a double bottom, like an Eve and Adam formation. And the important part is to close above this peak between these two valleys. It's done that yesterday. This is on the weekly as well. It's done that yesterday. It's now retested that. And hopefully we will see a move to the upside. This is really looking like a classic double bottom, even Adam formation with the round bottoms, and even you've got the ascending lows over here, so these high lows. So the main thing we need to see is just to maintain being above this important level of 52 to 53 cents, and then we can really kick on from then on. Now to the important part, how to maximize your gains in this bull market, whatever you're holding, altcoins, Bitcoin. This is a very, very important read, and this will last. This kind of method, this mentality will hopefully give you enough information to hold until the peak of the bull run and beyond. So there's an article from Forbes. Before you get out of the stock market. Now obviously these are not that directly correlated to crypto, but this is trading, this is investing. The actual knowledge does relate to crypto. So let's begin. So it's talking about, as you can tell, being before you get out, before you sell your position during a recession or whatever, before you get out, read this. So it's normal to feel, and it's obviously relating because we're now going for a small correction, but we're going to have much deeper corrections during this bull run. So this is only a small percent. We could easily go have some more major moves in the next few months up until the end of the year. So it's normal to feel anxious, concerned, worried, or even fearful during times when markets are highly volatile or losing value. It's also understandable if this volatility or decline makes you feel like it's time to get out of the market. There's a reason for this. Research shows that as humans, we feel the pain of loss much more sharply than we feel the joy of winning, gaining, or earning. So for example, if you lost £100, you'd feel that a lot more than if you made £100 or dollars, if that makes sense. This is called loss aversion, and it's the reason you might feel extremely passionate about doing something like getting out of the market and moving your portfolio to cash. Let's move on. So Vanguard created a chart to show what happened to 3 investors who found themselves at the bottom of one of the worst bear markets in history, the Great Recession. Now obviously we're not going through a recession, this is crypto markets, this is a small correction, but this is just a magnified version of a correction. It just takes a lot longer and it's a lot deeper. It obviously affects the entire economy, not just us crypto investors. But the lessons still apply. So investor number 1, represented by the blue line in the chart below, decided to stick with her plan. She started with a 50-50 allocation and did not sell out of the equities portion, so she didn't sell any of her stocks. And the second person sold their stocks during this crash and moved to bonds. The third person was absolutely scared out of his boots, sold his entire position and moved to cash. And you can see here, this was the result of those 3 individuals. The person who stayed steadfast, did not sell any of the position and just rode the correction, which took a couple of years, had the highest balance after 9 years, 1.9 million. And the person who sold their stocks and moved to bonds, that person had 1 million after 9 years. And the person who moved to cash was the lowest and actually lost their position. So from 1 million, basically the person number 2 did not make any money, but recovered after a long time. Person number 1 made the most money, recovered the loss and then some, and number 3 lost money. So investor 1, which I just summarized, stayed put and stuck to her plan, regained all her lost value in her portfolio by mid-2010. By 2017, her portfolio balance was almost double the other 2 investors. He panicked and couldn't stick with their investment strategy. So if you get out, when do you know you can and will get back in? So if you sold your position, when do you get back in? Even getting out of the market just until the worst is over is a dangerous move for long-term investors. First, market timing in general is a loser's game. it's nearly impossible to predict when to jump out, so you miss all the worst days without missing the good days too. Second, missing a few, this is why I highlighted this in red. Second, missing a few of those very good days could make a huge impact on long-term investors. So, getting out the market and, potentially missing the worst days. But then when you miss throughout those worst days, those few good days, this has a massive effect on your portfolio. But if you stick to your plan and stay invested for the long term and experience all the days in the market, including the nasty ones, you will still show a decent return over this period. Now, obviously, again, this doesn't relate to us right now because we're only looking at 1 year, essentially 1 year's investing. But you can kind of squeeze that 1 year and call these corrections mini recessions, whatever you like, similar. Because during these 30% moves, you could sell your position, wait on the sidelines, and then you'll miss a few very good days. Same thing applies. But if you miss just 10 of the best days over almost 20 years, you cut that return to almost nothing. And when you miss the best 25 days over those decades, you lost money. So that is essentially the main point that I'm trying to make with this bull run. And obviously, you could sell some of your positions during these corrections and wait until the correction's over and then jump back in. But what's going to happen is you're going to miss the best days, and this is going to reduce your return to almost nothing or a lot less. Probably you're still going to make money in crypto, but you're gonna reduce your returns a lot less because you're going to end up missing the best days. And of course, the longer you're out, if you do that with every correction, because there is going to be another 1 or 2 during this bull run, and if you are out of the market when this happens, you're going to end up missing more of those best days, which is going to reduce your returns by a significant amount. So that is essentially the point that I'm trying to make. The best way you can maximize your returns in this market is by staying in the market throughout this whole bull run. If you sell your position, and I've made that mistake in the past, if you sell your positions, after having purchased, then this will reduce your return by a significant amount because you're going to end up missing some very, very bullish days. Because as they said, market timing in general is a loser's game. So if this, whoever wrote this article, I'm sure is a knowledgeable person, is saying this, then how can we expect to be good at timing the market? So the best thing to do is just to stay in the market. Don't sell your positions until they've hit your target. This is a compressed version of what this article is saying, because obviously we're not looking at 20 years of investing. This is 1 year of crypto investing, which is equivalent to 20 years of stock market investing. So stay in the market. You're going to feel those emotions of fear, uncertainty, like this is going to zero, but you got to remain steadfast, stick to the plan, stick to the long-term plan of this crypto bull run, and it will hit target eventually. That is the message that I want to pass on to you. This is what I've learned going through the bear market as well, going through all that pain. You do end up recovering your losses, but of course, the disclaimer: this is not financial advice. This is just what I'm doing. This is what's worked for me. And yeah, I hope you got some value from that. And thank you for watching. See you in the next video. Peace.